Bitcoin, man. It's been oddly quiet out there, hasn't it? Like everyone just holding their breath.
Yeah, it's kind of eerie.
Well, today we are diving deep into why that is
Mm-hmm.
and what it might mean for, the future of Bitcoin.
The future. Always the big question.
Always. And to help us unpack all of this, we're going to be looking at some new analysis from Glassnode.
Always love their stuff. They really get into the nitty-gritty.
Absolutely. They're really one of the best sources out there for this kind of data. So in their latest report, they're calling this a stagnant market, which I got to say, sounds kind of ominous. But as we dig in, I think what we're going to find is that stagnant in the world of Bitcoin, well, that doesn't necessarily mean nothing's happening.
Yeah, stagnant can be deceptive. There's often a lot going on beneath the surface.
Okay, so let's peel back some of those layers then. What has Glassnode uncovered here? What makes their analysis so interesting?
Well, what I find so fascinating about their approach is they're not just looking at price action. I mean, that's what everybody focuses on, right?
Right.
But they go deeper. They analyze on-chain metrics, and that gives us a much more in-depth look at what's going on under the hood of the market.
It's like looking at the engine, not just the speedometer.
Exactly. So one of the key metrics they're highlighting right now is this thing called realized cap.
Okay, realized cap. I'm familiar with market cap, of course.
Right. So market cap, that just reflects the total value of all Bitcoin based on, whatever the current price is at any given time. But realized cap, it's different.
Okay, how so?
It looks at the price at which each Bitcoin last moved on the blockchain. So it's more like a picture of actual capital flow in and out of Bitcoin.
So it's like, instead of just looking at the price tag, we're seeing what people actually paid for the Bitcoin they're holding.
Yeah, exactly. It gives us a more accurate picture of what's really happening.
Okay, I'm intrigued. So how does this realized cap play into this whole stagnation thing we're talking about?
Well, here's the thing. Right now, the realized cap is basically flatlining. It's just kind of hovering there.
Right.
And what that tells us is that despite this, seemingly quiet surface, there isn't a massive wave of panic selling happening, but we're also not seeing a flood of new capital rushing in to buy the dupe either.
So it's not the frenzy we're used to seeing in the Bitcoin world.
Exactly. It's strangely balanced,
Yeah.
which honestly is pretty unusual for Bitcoin.
That is unusual. It really is like everyone's just holding their breath, waiting to see who's going to make the first move.
Exactly. And this actually ties into another key insight from Glassnode's analysis, which is the rise of the HODlers.
HODling. Gotta love it when crypto slang enters the mainstream lexicon. But it's more than just a meme at this point, right? What does this dominance of the HODlers really tell us about the state of the market?
Well, it tells us that the supply of coins that are actually readily available for trading, that's shrinking.
Makes sense. If more people are holding onto their Bitcoin for the long haul, there's less available to buy and sell in the open market.
Exactly. And with so many Bitcoin locked away in those long-term wallets, well, the market becomes much more sensitive to even small shifts in supply and demand.
Oh, I see where you're going with this.
Think of it like this. You have this limited edition item, right? And suddenly, more people want it. The price is going to go up, even if only a few people are actually selling.
Right. Basic economics, but with that Bitcoin twist.
Exactly.
Okay, so we've got this low activity market dominated by HODlers, which means the supply available to trade is shrinking. It really sounds like the potential for things to change quickly is pretty high, wouldn't you say?
Pretty high, yeah. But also kind of hard to predict which way it's going to go.
Right. It's like a coiled spring. You could just feel the tension building, and it's only a matter of time before something gives.
Okay, yeah. I like that analogy.
And this is where things get even more interesting, because there's another piece to this puzzle we haven't talked about yet. Stable coins. Yes, stable coins. Digital cash, pegged to the US dollar. Always lurking in the background, ready to jump into the crypto game.
Right, and they play a huge role here.
Okay, so for anyone who might not be super up to date on their stablecoin knowledge, what are they telling us in this particular situation?
Well, the really fascinating thing right now is the sheer volume of stablecoins that are just kind of waiting in the wings.
A mountain of digital dollars just itching to get in on the action.
Exactly. Glassnode calls this dry powder, right? Basically, it's this massive reserve of buying power that's ready to enter the market at any time. And they use this metric called the SSR oscillator to track it.
Okay, SSR oscillator.
Mm-hmm.
I've heard that term thrown around, but I'll be honest, I haven't quite wrapped my head around what it actually means.
Yeah, it can be a little bit confusing.
Can you break it down for me and for any of our listeners who might also be kind of scratching their heads right now?
Totally. So basically, the SSR oscillator compares Bitcoin's market cap to the total supply of stablecoins.
Got it. So it's measuring the ratio between those two things.
Exactly. And when the oscillator is low, like it is right now, that means there's a lot of stablecoin buying power relative to Bitcoin's current valuation.
Interesting. So we've got this huge amount of potential buying power just sitting there in the form of stablecoins. And at the same time, the supply of Bitcoin that's actually available to buy, that's shrinking because of all the HODlers. It really feels like the stars are aligning for a pretty wild ride, wouldn't you say?
That's one way to put it. Like I said, it's a coiled spring. If even a portion of those stablecoins were to flow into Bitcoin, especially with limited supply available, yeah, it could put some serious upward pressure on the price.
Okay, but couldn't it go the other way too? What if, instead of buying, people decide to jump ship? Negative sentiment takes over, and suddenly everyone's trying to cash out.
Oh, absolutely. That's always a possibility. That's the nature of volatility, right? It can swing both ways.
Right.
But, what Glassnode's analysis seems to be suggesting is that even if we do see a downward move first, this current period of low volatility, it's probably temporary.
Temporary, huh? So buckle up, everyone. Things could get very interesting very fast. But, this all kind of begs the question. What are people supposed to do with this information? Should everyone just run out and buy Bitcoin right now?
Well, that's the thing about market analysis, right? It's not about giving financial advice or predicting the future with 100% certainty.
Right, of course.
It's about understanding the context, looking at the data, and being able to make more informed decisions based on that information.
So it's less about saying this will happen and more about saying here are the possibilities.
Precisely. What you choose to do with that information, whether you decide to buy, sell, hold, or even just observe, that all depends on your own individual circumstances.
Risk tolerance, investment goals, that kind of thing.
Exactly.
And on that note, a friendly reminder to all our listeners. Always do your own research, seek advice from a qualified financial advisor, and of course, never invest more than you can afford to lose. But let's shift gears a bit here. We've been talking a lot about price movements, but I'm curious to hear your thoughts on the bigger picture. Because Glassnode, they've kind of hinted that this stagnant period, it could be setting the stage for something much bigger, something that goes beyond just the price of Bitcoin. What do you think they might be referring to? Glassnode has hinted that this stagnant period could be setting the stage for something much bigger in the crypto landscape. What might they be referring to?
This is where things get really interesting. We've talked about Bitcoin's price potentially being like a coiled spring ready to release. Now imagine that energy impacting not just Bitcoin, but the entire crypto ecosystem.
Okay, I'm picturing a ripple effect. Bitcoin makes a big move, and altcoins, DeFi, NFTs, everything gets caught in the wave.
That's the typical pattern we've seen in the past. But what Glassnode is suggesting is that this time, things might play out a little differently.
Different how? Give us the inside scoop.
It goes back to the rise of the HODlers.
Okay.
This growing segment of long-term holders, it kind of indicates a maturing market. One where Bitcoin is increasingly viewed not just as a speculative asset, but as a potential store of value, even, a digital form of gold, some might say.
So less about the quick flip, more about the long hold.
Exactly.
But how does that impact, the entire crypto ecosystem?
Well, think about it. If Bitcoin starts acting more like a traditional asset class, less volatility, more stable growth, that could bring a whole new level of legitimacy to the entire crypto space.
So instead of the Wild West, we're talking Wall Street.
Exactly. More institutional adoption, clearer regulations, wider mainstream acceptance.
Wow.
It's a big deal.
So this seemingly quiet moment in Bitcoin's history, this could actually be a really pivotal turning point for the whole industry.
Absolutely.
It's like we're witnessing the early stages of a massive transformation.
And the path Bitcoin takes from here, that's going to determine the direction of that transformation.
It's a lot to process.
Yeah.
But one thing's for sure, this stagnant market, it's anything but boring. Big thanks to Glassnode for such a thought-provoking analysis, as always.
Yeah, they really knocked it out of the park this time.
And of course, a huge thank you to you, our listeners, for joining us on this deep dive into the heart of the Bitcoin market. We've covered a lot of ground today. We're going to leave you with this. If Bitcoin does evolve into this more established, more stable asset, what does that mean for the future of altcoins? Will they rise with the tide? Or will they need to carve out their own unique paths to thrive? Let us know what you think. Head over to the social media platform and join the conversation. And until next time, stay curious and keep exploring the fascinating world of crypto.